What's going on, money lovers? Welcome back. So today I want to unveil to you my entire stock portfolio. We're going to go through all 42 companies that I own. Without further ado, let's get right into it. Alrighty guys, so before we get started, I've actually been spending the last couple days building this spreadsheet on Google Sheets and learning how to do that. If there's something you're interested in, here's what you can expect, what I've input so far. You can input, let's say you want to track your stocks, you could put the ticker in here, the name would auto-generate. So you can see all these columns here, percentage of your entire portfolio, current price, current price of the share, current value. So you would only manually have to enter what you see at the top here. So the ticker, how many shares you own, what your cost basis was per share, and then this will calculate the rest, and then also the sector. And then it'll also give you a sector breakdown, which I really was fascinated by, so you could see exactly how you're allocated sector by sector, what percentage of your portfolio is in tech versus consumer discretionary versus healthcare, yada, yada, yada. And it'll also build you a nice little pie chart. So if this is something you're interested in, let me know in the comments below and I'll make a spreadsheet that's accessible for everyone. Alrighty guys, so here we go. So the way I've laid this out here, we'll start with the 42nd stock in the portfolio. They're ordered by their percentage weighting. So this is my smallest position here. Got the ticker, the full name, percentage of the portfolio it makes up, the current price, and what my cost basis is. These first few are gonna say 0%. Just because it rounds, and they are very small positions in my portfolio that are less than 1%, and in fact closer to 0% than 1%. But you know, some of these are companies that I just started positions in or are down. So we'll get to all that in a second. So number 42 is the Grayscale Ethereum Trust, which I hold through my Fidelity account. Now I had started buying this not at a good time here, as you can see, but luckily I didn't put much in. And I do want to get this transferred over to my Voyager portfolio anyway, so I don't plan on adding any more here because in Voyager I can earn interest on it. So I'll probably be selling that maybe when it comes back up a bit and transferring that over. All right, so number 41, another small position, Viatris. I just started buying this one maybe about a month ago. They just spun off from the company Merck, so there's a healthcare holding. I've been trying to increase my healthcare positions because I haven't historically held many healthcare companies. Number 40, PepsiCo, another company I just recently started buying. Again, these are not big positions, and I'm planning to build, Pepsi and Viatris up. Pepsi, unfortunately, is such a great company, great stock. Very rare that you can get it for a good price or on sale, so I'm very slowly averaging into that one. Number 39, Clover Health, really has not panned out so far. As you can see, I'm down 50% from my cost basis versus the current price. Holding number 38, we got Pfizer, again, another healthcare company I recently started adding. You probably know they make the vaccine. I got the Pfizer vaccine. I'm still standing. So that's another one I plan to continue adding to. Altria Group, after a long time of going back and forth on whether I wanted to own this, and I really struggled with it for a long time, I decided I couldn't pass up on their massive dividend, and I think that they have great potential with the MJ sector. I don't know if I'm allowed to say the word on YouTube, so let's just say Snoop Dogg's favorite herb. I think they do have a lot of potential here, and again, never going to make this a huge position. Maybe it ends up being a 1% position in my portfolio or something like that. All right, next up we got Stag Industrial REIT. I know you guys are probably thinking these are all zeros here, but so these are probably anywhere from 0.2 to 0.49% weighting in my portfolio. So Stag, great company. I've done analysis on them in the past. It keeps going up. Another one I would love to buy more of, but I'm averaging in slowly because it is kind of at an all-time high. Number 35, SoFi, really interesting company. I think they have a lot of potential, but it is a crowded space. They're kind of like another Square that wants to, be the future of banking and mortgages and just making it easier for the consumer, putting it all in one place. They've been doing very well and a lot of people really like it. So let me know if you want to learn more about them. Number 34, AbbVie. I used to own a lot more AbbVie. I ended up selling out and I started the position again just because, again, just a fantastic company and I want more healthcare exposure. Number 33, VYVGF, Voyager Digital. Now all the names were auto-inputted by Google Finance, but they don't even recognize this one because it's not listed on a major stock exchange yet. This is a very speculative holding of mine. Voyager is the app I use to hold my crypto and earn interest on it. And I think they do have a lot of potential. I really like the platform so far, so I figured I'd buy some of the stock and see what happens, but I am down on that position as well. 32nd largest holding, Nvidia, another company. If you watch my recent videos, you'll know that I just started buying it and it's up a little bit. Fantastic company. Number 31, again, Alibaba. I've been talking a lot about this company lately. It's almost at a 0.5% weighting in my portfolio, and my plan is to get it up to 1%. If you're interested in hearing my perspective on Alibaba, check out my recent videos on it. My 30th biggest holding, ARK-F, the ARK FinTech Innovation Fund. Probably heard of ARK Invest. This is their fund specifically geared toward financial technology companies, and you'll see I own a bunch of ARK companies, a bunch of ARK funds coming up. I used to be a lot more excited for, but I have not been buying into as of late. Number 29, EDXC, CBD Unlimited. This is a company I bought very early on in my investing career, probably 3 years ago. As you can see, down quite a bit. Has not panned out so far, but it's a CBD company. It's interesting, but it is a penny stock, so I'm just hoping to break even here, just holding to see what happens. Might sell it, we'll see. Number 28, QYLD. I recently started adding these covered call ETFs just because they give unbeatable interest rates, about 1% a month you can get from QYLD, and it does fluctuate a little bit, but from what I can see, they're consistent, and I almost see this as like a little savings fund I could park my cash in, so definitely want to build that up to maybe a 1 or 2% position eventually. And then same with XYLD. So QYLD is NASDAQ 100, XYLD follows the S&P 500, and the yield is a little bit lower on that one, but still maybe around 8%. So those are both great, I think, for income if you're interested in that. All right, number 26 here, Amazon. I own a fractional share of Amazon. Debating if I want to get it up to 1 full share or if I should just sell it. I know Amazon's a fantastic company, but it's not exactly affordable right now. Number 25, ARKQ, ARK's Autonomous Innovation ETF. So again, I've made videos on ARK Invest in the past. If you're interested, go check those out. Next up, Open Door Technology is another interesting company. One of the more speculative holdings I have. And as you can see, I've really been trying to get these speculative holdings, down to the lower portion of the portfolio. And as we get to the higher numbers, you'll see that I have some very real successful companies that I probably am going to hold on to forever. But anyway, Open Door's whole thing is they want to revolutionize how you buy and sell houses. Very interesting concept. I think they have a lot of potential, so we'll see where it goes. I am down almost 50% right now on that position. Next up, 23rd biggest holding, we have Clorox Company, another company I just recently started the position in, and I actually added some more shares after the recent major dip it had of around $20, went from 180 to 160. So this is getting close to maybe a 0.5% position in my portfolio. Again, ARKX, ARK Innovation Space ETF, ARKW, all these ARK funds. There was a while where I was buying these consistently, but again, I'm just kind of holding what I have now, and we'll see what happens. Now, my 20th biggest holding, Grayscale Bitcoin. I am up a significant amount in this position, around 50%. This is another one that I think I want to transfer over to Voyager, where I can earn the interest and, own Bitcoin more directly. All right, number 19, look at that. This one actually makes up of 1% of my portfolio. NIO, ticker NIO. This is an electric car company based in China. And I think that they are number 2 to Tesla right now. They're one of the only companies that's actually building electric cars in, bulk, producing maybe, selling around 10,000 cars a quarter, maybe a little bit more now. So I think that they have some great potential, and they're my number 2 electric car pick after Tesla. All right, next up we have ARK-K, ARK's main fund, which has a little bit of everything sprinkled in there. If you're interested in learning more about the ARK funds, let me know in the comments below. I can do another video updating on those. All right, next up we've got Palantir. This is a very interesting company that I think has tremendous potential. I got in around $16.50, and it sits somewhere around $22 right now. So doing well there, and this is a company I could see myself, buying some more shares of. I think it is still pretty cheap, all things considered, and they really seem to be, leading the way with innovation. So let me know if you want to learn more about that company. Number 16, we've got Johnson & Johnson. I've made videos on this in the past. Possibly the best dividend stock of all time. J&J, Clorox, these are companies that are just going to keep going up over time. They're well diversified. They do so much. And these are hold forever type stocks that I'm going to keep building up. All right, number 15, Microsoft. I got into Microsoft during the crash during the pandemic, so I was able to get a great cost basis here of $153, almost doubled that now. So Microsoft makes up a little over 1% of my total portfolio. Another fantastic company, a market leader. Number 14, ARKG. So this is ARK's Genomic Revolution Fund. So you could think about it as biotech and healthcare type companies. I was very intrigued by this one, especially just because it is so different from the rest of their funds, and it's the only one I believe that doesn't hold Tesla. It's all focused on these biotech companies, which I don't feel comfortable. I don't know enough investing in individual biotech companies besides biomedicine, which we'll get to in a minute. So I'd rather just let them do it for me. And again, this was a company I was averaging into and I haven't bought in a while, but it is down a bit from where I bought it, so it might be worth another look. But again, very speculative. We'll see what happens there. All right, number 13, Realty Income, the monthly dividend REIT. This is a REIT that runs triple net lease properties and pays a monthly dividend. I really like Realty Income. This one is probably another hold forever type company. Just get consistent cash flow from, and it's been doing very well, up to $70. My cost basis is $59. All right, number 12, we got Mind Medicine. I bought at an average cost of $2. I actually started buying this one when it was around 30 cents, and then I just kept averaging in as it kept going up. Currently sits somewhere around $2.91. So again, very speculative company. I've made several videos on it in the past, but it's a very interesting company. I think it's worth a look. Number 11, IBM. IBM really gets no love on Wall Street, and I really like this company. I'm rooting for them. I could see it being a great comeback story. Decent position I have in IBM. Got in 129, currently sits somewhere around $143. And I think IBM is turning it around. The last decade was rough for them, but I think they're on the right track now. I've made videos on them as well. Next up, we've got AMD. Makes up 2% of my portfolio, my 10th biggest holding. Very similar to NVIDIA, they're primarily a semiconductor business, and they've been doing very well. If you look at their stock chart over the last few years, they are on quite a tear. Great CEO. Products are very hard to get your hands on. They're in high demand right now. I think AMD is a fantastic company. It's been on quite a run the last week or so as well. Number 9, I own FXAIX here, which is a Fidelity S&P 500 index fund. So again, index funds I think are great for everyone. I definitely, try and average a little bit of money into my index funds each month. Next up, I have Disney here, another company that I started buying during the pandemic crash, and Disney actually went all the way down to, I believe, low 90s, maybe high 80s at the bottom. So my average cost is $124. Disney's been on quite a run. Disney Plus is on fire. They're really they've really created a juggernaut of a streaming service over there. Disney's another company I think you just hold forever. They're going to keep cranking out billion-dollar movies. Number 7, coming in at 2% also, I own Starbucks. Cost base is $80. Currently sits around $118. Starbucks, another great dividend growth company. I really like Starbucks. I think it's a great business model. Number 6, we got VTSAX, which is a Vanguard total market index fund. I got in around $80. It's up to $110. This is something I've been averaging into. I put some money in every month. I've been doing that for the last 2 or 3 years. Number 5, RioCan makes up 3% of my portfolio. Think about this as a Canadian REIT version of Realty Income. A little bit more focused on residential properties, whereas Realty Income is purely commercial. They also have, commercial properties as well and some multi-use properties. Very interesting company, high dividend. I like them a lot. They've been doing very well for me. All right, number 4, we've got Apple, 3% holding. Another company I picked up during the pandemic crash. Average cost of $90. It's up to $150. You guys know all about Apple. I don't need to tell you anything. Now, FSKAX, this is basically the same as VTSAX. I just hold it in my Fidelity account. So it's a total market index fund. These total market index funds are great. You'll probably make on average they bring in around 10% a year. In the past decade, it's probably been a lot more than that. But anyway, average cost $88 up to $126. If passive investing is your style, then these index funds are the way to go. I've made videos on those as well. Number 2, Facebook stock makes up 8% of my portfolio. It's been on quite a run. Average cost $183. And it's run all the way up to around $360. I think Facebook has a lot of potential. I'm actually going to make a video on Facebook soon. They're slept on, I think, of the top tech companies, FAMGA type companies. Facebook has not gotten a lot of love the last couple of years, but I think people are starting to realize that they have immense potential, even with things like Oculus. I'm going to make a video on all this, so I don't want to get too deep into it. And then my number 1 holding, no surprise, Tesla. Makes up a whopping 58% of my portfolio. before you go crazy, most of that is gains. So maybe I put around 8 to 10% of my cash that I invest into Tesla, and as you can see, it's pretty much 5x here. My cost basis is around $155. Tesla's currently somewhere in the ballpark of $710. So yeah, that's why Tesla is so heavily overweight in my portfolio, and I do plan to start trimming down some shares. I'm never going to sell the bulk of my shares. I'm definitely hanging on to those for the long run, but I do plan to start trimming it just to diversify more into some solid dividend paying stocks, things of that nature. So next up, I want to show you guys a pie chart so you guys could see how this all looks by sector and industry. And that 58% Tesla holding is probably also part of the reason fouling up my listing here, why so many of these are showing up as 0%. Let's look at the pie chart though to give you a better perspective. Data from Fidelity, use Google Finance, enter some formulas so that it'll automatically input. They have Tesla classified as a consumer discretionary company, but Tesla is so many things. Easily a technology company, automotive company, obviously. It could be a consumer staple eventually, consumer discretionary. I don't think that this is an accurate portrayal. So, if you look at it that way, Tesla will be more evenly split. So we're going to focus on this pie chart for today. And as you can see here, I just minus, the Tesla position because like I said, Tesla could even be its own little index fund. I mean, Tesla is basically everything ARK is trying to be with innovation. I mean, it's an AI company, it's a solar power company, battery storage. I mean, they're just doing a little bit of everything. So it's almost like an innovation fund in and of itself. Anywho, I digress. As you can see, I just classified the index funds separately because I was curious, what percent they made up. Around 25% of my portfolio is in index funds, which I think that's great. Over the long term, I know that nothing beats the index fund, so I want to have good exposure to the total market. Then technology companies making up around 18.5% of my portfolio. So, that's obviously your companies like Facebook, Apple, Microsoft, IBM. Then communication, which actually I think Facebook was classified as a communication company. Disney communication, and we got 7.7% consumer discretionary, almost 10% healthcare. I classified the ARK funds as mutual funds. So this looks pretty good to me. As far as financials, you'll probably notice my financial exposure is very low, and the only financials I really have exposure to here besides SoFi are those cryptocurrencies. But I think I get more than enough financial exposure through the index fund. I believe something like 12 to 14% of the index fund is in financial companies. I also have no interest of owning the banks. I think that is an industry that is ripe for innovation, and the days of brick and mortar banks, I believe, are numbered. So I'm in no rush to add any more financials here. So I like the way this turned out, and I have 10% real estate, so that's primarily Realty Income and RioCan, and then I just started that stag position a couple months back. So again, if this spreadsheet, something like this is of interest to you guys, let me know. Here's what I have so far. You can see at the top what gets manually inputted and then what it'll automatically do for you. And I'm planning to expand this, I'll add dividend yields and things like that. If there's anything else you want to see in here, let me know. And if you're interested in a copy of this, I'm happy to send it. And it's pretty cool too. You can see the sector breakdown here, which will convert to the chart, which I think is very useful to make sure you're diversified and not getting overweight in any one particular company or industry. So if you enjoyed the video today, if you learned something, please don't forget to like and subscribe and hit that notification bell. This is Vinny from the Investment Club, and I'll see you next time.